Hey, Mike here. I'm going to do a little thing in my portfolio, and I want to talk about what's going on in the stock market real quick and what I plan on doing. First of all, here's my open portfolio, which reflects mirrors my real investment account. And what I'm doing is I'm depositing $20,000 into my account. And make sure, there it is. What this has done, and actually, well, anyway, what this has done is basically taking me almost completely off of margin. I'm about 101% invested, essentially, in the stock market, and that puts me in a position to buy more stuff if I want to. In the way I invest, margin may not be appropriate for you, but at times I feel comfortable using it. Now, if you've been following me, you should know that I'm mainly invested right now in commodities, mining stocks, and European markets. And I'll go over my positions with you real quick and what I think is going on in the stock market. This is today's news, though. As the market opens, it's roughly essentially even, although gold is down today. Everything else is kind of mixed, and we'll talk about that in a second. First, let's look at my positions, and I'll go over them real quickly with you. This is a fund that invests in commodities and in commodity-related stocks, pays a big dividend. This is a Russia ETF RSX. VIP is a Russian stock, and I own these couple stocks I mentioned from way back in August. I bought this in August too. This is gold right here. Commodities, GDXJ, which is gold stocks. I bought that back here. Let's talk about that real quickly. I'm still bullish on gold stocks, even though, just like everything else, they pulled back since September. I do believe that they're going to bottom and do fine and go up to and do great next year. This is GREK, which is an ETF which holds Greek stocks, and I bought it back here. And you know, I think it's run up of essentially 100%. I think it's going to go sideways here for months, then break out towards the end of next year and have a giant leg up. But I think it's essentially now in a pretty big trading range, but I'm in from below here, and I consider this a long-term investment. I'll be holding for a long time. Now here's a couple important stocks here. Europe markets I'm very bullish on. EWK is Belgium, and it's broken out to new highs already, even though the U.S. stock market and many of these other things, as you've seen, are below the highs. And so is Austria, is in the process of breaking out of this big stage 1 base. These are markets I expect to go up huge over the next 12 months. KGC is a mining stock. It's actually performing better than most mining stocks. It has resistance at 10.5. I think it'll break that sometime this month or in January and do great. PT is underperforming. It's a Portugal telecom company, but I think, you know, as soon as the current correction in the market shifts into another big run higher, this stock will go up too. This is a copper company that pays. It dropped here because it paid out a giant, like almost 30% dividend, and it's gone back up, and I think I'm in from essentially about here. FCX is another mining stock, doing fine. EWI, again, this is a European ETF in a wonderful position to break out of a stage 1 base and go up. And Spain is in the same position. If I only could own a few things, like let's say 5 positions, I would put that money into ETFs, and I would put it into several of these European ETFs in a commodity ETF or something. ESCA is a shipping stock. I just own a small position down here. It's a Greek shipping company. Now here's something I'm very extremely bullish on right now. It's Ireland. Ireland is in a position like Greece. It's one of the most undervalued markets in the world. It's a position to break out of stage 1 base. A position I think Greece was in August. EIRL is, you can see it better. This is also, I don't own this. It's similar to IRL. It's a fund breaking out of a long base too. But if I didn't own anything, I'd be really hot, on buying IRL, buying EWK, EWO, EWI, EWP, and maybe GDX or GCC or some sort of mining related issue if I only had room for like 5 ETFs. So anyway, these are my holdings right now. Now let's talk about the market and what I'm doing. I'm content. I'm essentially 100% invested in the stock market. I can hold what I got right now, not do anything, and I think I'll be very happy over the next year because, we've been in a correction since September, and those markets I showed you, a lot of them are outperforming the U.S. stock market, which is off its highs, while those European markets, many of them are breaking out or just on the highs. They're leading. They've been leading the market since July about. They're corrected less in the stock market, the U.S. market, and I think they're going to explode next year and do incredible. And I can just hold that and pretty much outperform the stock market. Now, I am now in a position, though, where I feel comfortable buying more. But I'm going to wait to see what happens in the next week. Because essentially what's happened, the stock market's corrected since September. It's bounced up the past essentially 2 weeks. And I think it's now in a position to either pause for a week or two or dip back down a little bit. This is the S&P 500 you're looking at. I don't think it's going to break the November lows, but it has the potential, I stress the word potential, to fall all the way back down to them, or take back half the recent gains, or go back down to the long-term moving averages, or simply go sideways for 1 or 2 weeks. Whatever the case, I think the market's in position to pause or dip and then break out towards the end of the year, head up to the September highs and go up for months afterwards. And the thing is, the stocks, the markets that will do the best are the ones that are holding up now, the ones that have been outperforming since July. That's mainly European issues. So what I'm doing right now, I'm holding what I got, and I'm watching what's going to happen in the market, the stock U.S. market for next week or two. And if we do pause, if we do dip back down, I'm going to buy more positions. And I think we're headed for a pause, a dip, whatever you want to call it, and then a rally to the end of the year, and then a great first half of 2013. And the right stocks, the right holdings have the potential to generate wonderful profits from now to the summer. And if we dip here, I consider that an excellent time to buy stuff if you don't own anything, or buy more if you're interested in increasing your investment position. So that's where I stand on the stock market. That's what I think's happening. That's actually a little bit of a minority position, because statistics or data is showing that the average American investor is actually pulling out of the stock market. They've withdrawn more money out of U.S. stocks and U.S. mutual funds and U.S. stock-related ETFs than they put in throughout 2012. In fact, if you recall, back in October, I was telling you there was a news story that said that in 1 week in October, more people pulled out more money in that week than any of the other weeks leading up to it. Well, here's the thing. November also saw record withdrawal week. Investors are panicking out of stocks, and where they're putting their money? Into CDs and into bonds. They're putting their money into things that I think are going to actually cause them to lose money down the road when inflation explodes, when interest rates go up, and so forth. I think we're years from that happening, but locking yourself in a CD right now is potentially disastrous down the road. But that's what the average investor is doing. And they're putting themselves in a dangerous position. and they're also fleeing from great profit-making potentials. The problem is the average American is glued to CNBC, and they're glued to watching the S&P 500 and watching stocks like Apple. Lots and lots of people, moved into Apple, and it was a great stock for several years, and of course, the past few months, it's taken a hard hit. And it's now a laggard in the market. So people are witnessing things like former U.S. big stocks and popular stocks not doing as well. The U.S. stock market as a whole, not doing as well as it did in the years before this. But it's not in a bear market. But that's enough to cause so many people such anguish and misery. And of course, we're in a negative news environment. The election upset a segment of the population. We're in a weak economy, recession, whatever you want to call it. There's a beat of negative news all the time on TV. In the summer, it was talk about the Euro crisis. The Greek was going to explode and disintegrate, although the Greek stock market's gone up 100% since then. And now it's fiscal cliff, fiscal cliff, fiscal cliff. That's all they talk about. And people are getting caught up in all this, and they're not paying attention to what's going on as a whole in these markets. And they're not seeing that European markets are breaking out, some of them, a lot of them, and already, and there's opportunities around the world to make money if you pay attention, if you take advantage of them. And that's what I'm here to do myself and to help you do, and that's what we're going to do. So that's what's going on. I've added some money. I'm not on margin, really, like 1% margin or whatever, and I'm in a position to buy using margin if we dip or pause, and that's what I'm planning. That's what I'm doing. That's why I had to update you on that. I haven't sent you a video like this in a few weeks, and that's what's going on. And I'll talk to you later.